So just consider this, all these points that you see on this PDF as the strategies that will enable you to maximize the profit in trading. So this is actually a crucial information that people really share in YouTube, because mastering, okay, I just looked at something recently that mastering the technical skill in trading is not as important as mastering the psychological concept of the trading itself. What I mean is, you can know how to spot the trend lines, how to spot the break of market structures, how to spot liquidities, and everything that has to do with the candlesticks and the market itself. So, but if you don't have any skill, any art in psychological concepts, you're actually and definitely going to fail in your trading, because trading is much more psychologically than technical and like the technical skill itself. So it's very important. The basic information that people should be sharing with you when it comes to trading, it's the psychological concepts, the psychological strategies that you're supposed to utilize in your trading journey. So this is what we're going to be talking about today, the forex profit maximization strategies. So, okay, looking at the point number 1 here, trade with the trend. This is the most important point that you see right here, trade with the trend. So, okay, what does it say at the bottom? It says always align your trades with the prevailing market trend. Use moving averages or trend lines to identify the direction of the market. Trading with the trend increases the probability of success and reduces risk. So remember the title of the video is maximizing the profit. So while maximizing the profit, we are minimizing the losses, the risk at the same time. So, okay, now let's go to the chart. I want to show you something. Okay, looking at the chart right now, you can see this is the Euro USD. The Euro USD is deep in, going down. You can see, looking at it from this, let's just focus on this section right here. The Euro USD has been going down from this high here. It's been going down. So when we're talking about the trend, looking at this overall trend, that you can see this is a bearish trend. The price is going to the downside. You see, so when prices go into the downside, look only for the sellers, look for the sell opportunities. Don't buy while you see price overall, the overall bias of the market is bearish. Don't buy while you see price is going to the downside. Don't come in here, you see price mitigated. No, let's not focus on this action. Okay, you can see price just broke with this structure right here, giving you a market structure shift. Okay, now let's see which bullish trend, this the bullish internal structure that looks potential right here. Okay, let's look at this one. Yeah, let's say you see price just broke this internal low, which indicates that price is about to go down. You know what I'm saying? So now you know that price is going to continue to downside after breaking the structure, and you decide that, okay, now that price is still going up, to mitigate some sort of a demand zone right there, or a supply zone, sorry. So you decide to buy right here, knowing that price is actually bearish. You want to take price towards these imbalances right here. Trust me, that is actually risky, and by doing so continuously, you might win some trades by luck, but not even by luck. You might win some trades, but that reduces the quality of profitability in your strategy. You will actually have more losses. You experience more losses than wins. I mean, price does not always retrace back to the demand zone. Sometimes it can just continue to go into downside based on the market conditions, the fundamental market conditions. Price can just continue going to the downside without giving you this retracement and continuation of break of market structures. So this is risky. Don't do this. If price is going to the downside, only focus on what sells. only sell. Look for sell opportunities here. You can see price broke the market structure right here. Price broke to the market structure here. This indicates a what? A bearish potential. Okay, now with price breaking the market structure, this is our structure. This is our most important structure that we see. The recent structure that broke this low, and this low at the same time. So now putting your Fibonacci here, when you place it or spot your Fibonacci right here, you can see price actually comes back to that Fibonacci level and mitigate the areas. What I like about it is the consolidation after mitigation. You can see price mitigate, then start consolidating on that Fibonacci level. That tells me that the buyers will actually fail into the upside. Now sellers will take it over. So meaning you can't be looking for buyers right there. Only focus on what sells. Then that's where you're gonna spot your sell opportunity, you sell trades, you sell positions, and then put the stop loss above this high. Why? Because this imbalance price can actually come up here, mitigating this supply zone. You can't put in your stop loss. Maybe here now it's going to be risky. Price will take you out. So be careful with where you put your stop losses. So this is actually a good area. And then coming to targets, you can actually target anything within this structure, within this structure. Anything can even target here, anyway. As long as you're gonna be patient enough to wait for price to hit your stop, your take profit, that's good. So you see, this is now what we're talking about. This is called discipline. You avoiding these internal moves and on focus on the major moves. This increases your profitability in trading. I hope you understand that. Okay, now let's go to point number 2. I'm gonna try to make the video quick. You can see already we've been talking for 7 minutes. So okay, now I'm gonna go to point number 2, master risk management. Okay, the risk management, now it says here, never risk more than 1 to 2% of your trading capital on a single trade. Always set the stop loss. Now the stop loss indicate the state of risk management. Is actually the first quality of risk management. So the stop loss indicate that you are actually not willing to lose all of your capital in your trading account. So okay, let's read it again. Always set the stop loss orders to limit potential losses. Okay, this aligns with the trade with the trend and what I just explained in the chart when I was telling you to avoid the internal structures and only focus on the major trend. So it says always set the stop loss orders to limit potential losses. So protecting your capital is the foundation of long-term profitability. This is what I mentioned when I was giving you guys annotations in the chart. So this is very important. I wish you can write this down and post it somewhere in your room wall where you can see it every day and read it every day. You should actually write this in your heart. Know this by heart. So use proper leverage. This is point number 3. Use proper leverage. Okay, let's avoid the leverages section. Leverages are not gonna play any role at the moment. They're not gonna play any role at the moment. Focus on high probability setups. Okay, this point right here is very important. Focus on high probability setups. What are we talking about when we're talking about high probability setups? Okay, first point of high probability setups, we're talking about, remember what we spoke, the first point was what? Trade with the trend. That means if price is going down, only take sells. So now your high probability setups will be what? Selling opportunities, not buying opportunities in a downtrend or an overall downtrend. Don't focus on buying opportunities, only focus on what? Sell opportunities, and those are defined as what? High probability setups. And also a high probability setup can also be defined in terms of strategy that you're using. Now looking at the Fibonacci here, this also acts as a what? High probability setup. You know what I'm saying? Based on your trading plan and also what you have experienced during your backtesting sessions, that will give you an insight onto what is actually a high probability setup according to your experience. And so this is actually based on experience. So yeah, let's go back to the PDF. Okay. We're in point number 4. Okay, now let's go to point number 5. I'm not actually gonna read here because okay, let me just read. Just read. Wait for clear trading setups with strong confluence, such as trend confirmation, support, resistance level, candlestick signals. Quality over quantity leads to better profitability. I like that saying. Okay. I hope you understand what that means, and I just actually gave you guys a breakdown on what does focus on high probability setups means. I'm gonna dive deep into it in the future and explain more, giving you guys more information about it. So, okay, now let's go to point number 5. Point number 5 is talking about maintaining trading discipline. What does it say at the bottom? It says follow your trading plan strictly. Avoid emotional trading, revenge trading, deviating from your strategy due to short-term losses. Okay. Should I go to the chart? Okay. What this means actually is, as a trader, you should have a trading plan. You should have a trading plan which contains the following points. It should contain the risk procedures. It should contain your strategy, the step-by-step strategy, and also contains your sessions. What time are you going to be trading? So now another thing it should also contain is what we spoke about, the high probability setups, the setups that you'll be willing to trade, the setups that you'll be focusing on. And once you have the trading plan and the type of setups that you're focusing on, don't add anything else. Follow your trading plan. Take the trades that are high probability. So only focus on high probability trades. Trades that are, you see, this has at least 90%, 80 to 90% of winning and 10% of loss. That's what we mean by high probability setups. Such as when the price is actually dipping, only focus on sells. This is what we're talking about. These are high probability setups. When price is going down overall, only focus on taking sell opportunities. Don't look for buys, because now that reduces the quality of your strategy and your setups, as well as increasing losses and minimizing the wins and the profitability of your strategy. So now keep a trading journal. Okay, we're gonna talk about that. That's a topic for another day. And let's go to point number 7. Okay, combine technical and fundamental analysis. We spoke about this in the previous video of when we're talking about, I forgot the title, but yeah, we spoke about this in the previous video. You can check it out. And what does it say here? It says blend both analysis for better timing and understanding of market direction. Use economic indicators, interest rate news, and chart patterns together to gain an edge. So now, okay, this is also important, but not as important as the above information that I just broke down for you. So now, okay, combine the technical and the fundamental analysis. I actually have not much information for you about this topic. So we'll also dive deep into it in another video as well, where I will have tangible information and some practical or something to show you, some examples to give you so that you can actually understand what it means or what we're talking about here. So no, let's go to trade during optimal market hours. This is what we're talking about when we talk about trading sessions. Trading sessions, New York session, London session, and the rest of them. The most important ones are New York session and London session, because that's when the market is more volatile than any other session in the market or in the forex trading, based on your assets that you're trading, more especially the USD assets. Those are more volatile during London session and New York session. So once you set your trading plan at certain hours, at trading your assets at certain hours, please follow that trading plan. Trade exactly and accordingly. Don't trade during the AG session while you wrote on a trading plan. You just compiled New York session or London session. If you compiled London session, trade during London session. If you compiled New York session, trade during New York session. That's what we call discipline. You're actually being disciplined. You're following your plan. It's very important. And also, don't just create a trading plan that you're not going to be able to follow, that you're not going to be able to go with. You know what I'm saying? Don't just create any trading plan that comes, or you just think of it, okay, this will look good. No, it shouldn't be a trading plan that will look good. It should be a trading plan. Don't create a trading plan based on convenience. Create a trading plan based on experience, the experience which you acquired from your back testing sessions, the forward testing sessions. That's when you will actually have the information and know when to trade, when is the market volatile, when is this asset that I'm focusing on volatile, such as gold is more volatile during the New York session. So you can't be trading, you can't set London session on your trading plan while you're trading gold. I mean, gold is not that volatile during the London session. It's most likely volatile during what? New York session. You can both set both, but now you'll be over traded during the day. I'm saying we have two sessions in a day which are more volatile, which is London session and New York session. So you can't be trading both of them. Only trade one session a day. Only trade one session a day. You can set both, but make sure if you trade during the London session, make sure that's it for the day. Only take one trade, and make sure that one trade is worth it and it's a high quality trade and high probability trade. Don't just take any trade that you see. Okay, this looks good. It's not even going to a trade that doesn't even align with your trading plan. So make sure you follow your trading plan strictly. Apply the strict discipline when it comes to trading. Okay, we spoke about point number 8. Okay, point number 9, regularly review and adjust. Okay, we're gonna talk about that in another video as well. So okay, yeah, I think that was it for this video. I wish you can actually go through this. Just take a screenshot and actually go through this again, and make sure you add this in your trading plan. You know, post it somewhere, put it somewhere you can see it every day. Think about it every day. This is very important. This is a very, very important information. It's very important. So I wish you can actually follow these strategies and trade with them. Apply them as your psychological concepts and trading strategies. Are going to enable you to maximize your profitability and minimize the losses. You see, so thank you for watching.